Today, Traders Mindset Reset, Tuesday, day two. Day two of the week, day two of the trading week. Today is the second last day of the month. Tomorrow is the end of the month, and we have a new month starting on Thursday. Isn't that interesting that the Fed, FOMC, will be on the last day of the month? If you go back again and look at your daily charts, one of the most important things you can recognize is the timing cycle of a new month and how markets will either potentially reverse or begin a continuation of the existing move, or maybe even false break, reverse, whatever that may be. But new month, new timing cycle. So today we had 10 a.m. major red news. And just to reinforce to traders the importance of sitting on your hands and waiting, I'm not talking about Asia, not talking about London, talking about the U.S. session. Obviously, there can be first hour opportunities, second hour New York Open on the indexes. So to clarify, oil will often move at 9 a.m. New York time. And there's a correlation to the NYMEX pits, the old open pit times. I know there's been discussion about that timing, but the second hour typically is where you will see the oil market come to life. But more importantly, when the markets go out of balance, that is where you will often see the importance of the new hour come into play. So, as I mentioned to one trader, sometimes traders are so focused on reading the price action, they lose sight that the market is actually trading right from the beginning of the day from closing price, and it starts the auction process out and begins a range expansion, building the opening range, maybe expanding that range in London, expanding it again first hour, especially when there's major red news, 10 a.m. And by the time the 10 a.m., if it's a major release, by the time that 10 a.m. comes, the range for that session should already be defined. And whether or not the market has gone out of balance or not depends on the template and the instrument that you're looking at. So gold obviously was a textbook second day in a row, the exact same trade, different range, different volatility, the exact same trade. A parabolic move from the inside first hour. So again, if traders are getting stuck on the reading the price action and the Fugazi, there were two textbook opportunities for parabolic longs yesterday and today. Now, gold will often trap traders, but the difference of Monday and Tuesday was that they had already triggered other time frame traders into the markets, which meant that there was low-hanging fruit for that first hour parabolic opportunity, and we had short traders in the markets to the left from previous week's highs. Now, again, if you go back and look at your daily charts and then go back to the ends of months, in the week, the last week of months, you will often see explosive moves prior to the last few days of a month, because they will clean out a lot of what they'll call low-hanging fruit on larger time frames, and then they lock in their profits for the month, at the end of the month, and the game begins again at the beginning of the month. So today, sitting on our hands and waiting, oil was a textbook second hour reversal once the market went out of balance. And if you go back and look, I put a screenshot up. The market was in breakout. We had a higher high on Monday, potentially setting a market up for a dump and pump template. They took out Monday's low of the day, first hour. The end of the hour is out of balance, trading back into the breakout level from last Wednesday, Thursday. So, first red day. As I mentioned to a trader yesterday, it all depends on how it sets up. Isn't it interesting? Isn't it interesting that it's running away into the open of the US 12 candle window? It's running away. It's making you chase the move. Whenever you see a market running away, it's not Thursday after 3 days of rise. It's not Friday at the high of the week or the high of the month. It's on day two. And we're dumping down. So now we're in a range expansion on day two. Remember what I said, opening range, initial balance. Opening range sets the initial high and low for the week. Day two can often expand the range. One of those extremes will tend to hold in a large percentage of cases over the course of the week for a pump and dump or a dump and pump template before reversing and returning to that level potentially if that market reverses. But opening range, initial bounce. So on day two, we can see that range expansion and a perfect reversal back to the high of the day that explodes and is over in 45 minutes. So textbook setup on gold, textbook setup on oil. We had a great trade on the Japanese yen just prior to major red news. And then after major red news, a first bar opportunity for the reversal. And it's if you go back and look at oil from Friday, 5-minute chart, and compare the Japanese yen to the oil chart today, they're the same type of templates, just a different variation of where they've taken place in the template. A high of day, low of day reversal opportunity. Flip that around. It's the same chart that we saw on oil last week. So high and low of the day. And then whether or not you've actually got the best instrument. So you might be in an instrument that's going to give you 25 pips. And so you have to recognize where to lock in the money. On gold, I have no illusions with gold. But remember, look at the gold price and then get rid of all the candles and the Fugazi. The Fugazi is there to get you chasing price. We had a high, a close, and a low of the day. That's what we had going into the session. The market broke out. Now it's out of balance again. Once it's out of balance, what can happen? Anything. We have major red news at 10 a.m. Wait for 10 a.m. If a market opens up outside of balance, what does Dalton say? It has the potential for a large ranging day because it's going to seek value. It's broken out. It doesn't know where to go. It's either going to reverse back to where it's familiar with a familiar trading range, or it's going to seek new business in the opposite direction, the direction of the breakout. But we know better with gold because the breakout was before major red news. So listen close. If the market broke out on major red news, don't counter trend it until you understand that there's actually an opportunity. Maybe it's going to be 1 hour, 2 hour, 3 hours. But the breakout occurred before major red news. We had a first bar entry where it engulfed all the upper volume. I waited for a pullback because it was a large range candle and the volume that was trapped was up higher. Now, after major red news, have the confidence to understand we have a fundamental driver now that should shift the direction of that market. Where did that move start from at the beginning of the day? From the closing price of Monday. The entire auction process starts from the closing price of Monday, and typically they open at the same level, unless it's a Monday. It auctions apart from there and sets the range. Once it breaks out and fails, it's going to return back potentially to where it started. If you look at Monday, we had Friday's closing price, but we had Thursday's closing price as the highest closing price. It pinned right down to that level before reversing into the close of the day. Timings, levels, behavior of price, sitting on your hands and waiting. When there's major red news, start time from 9:30 to 10 a.m. Indexes gave a couple of scalps for nail and bail prior to major red news. DJ30 coiled sideways after major red news, higher high, dumped into the low of the day before going parabolic later in the session. The Nasdaq's breakout has pulled back inside of Monday's opening range. S&P gave a nice coil right into the open, right back to closing price for pushing higher and then jamming them in on major red news and coiling sideways and pushing higher. Haven't looked at everything yet. Euro Canadian gave an explosive move in London. Pound Canadian gave a little bit of a recoil, then a retest to the low of the day. There were several opportunities today. Euro Oz, explosive reversal in London. Low of the day. So day two now, we have range extensions. We have other time frame traders triggered into the markets. Timings, London open. Some of those markets exploded back. Once they've exploded back and we're back inside, we're now in a market that's been driven down. I don't really want to touch that unless I have a market that breaks down and sets up again into a coil. It's got a coil. That coil is where we'll get an explosive move from. So, yeah, great opportunity on day two. Gold 2 days in a row. Don't be surprised if gold just goes quiet for a day now. Who knows? We'll see what happens. It's the last trading day of the month. FOMC tomorrow, and we have non-farm payrolls on Friday. But sitting on your hands paid big time today for several traders. Again, congratulations. It's just, you know, if you step back, I'm going to go do a video later, 10 charts. We'll go through 10 charts and just demonstrate a simple understanding and process geared to timings, sitting on your hands, and having the ability to understand what type of risk reward the market is setting up for. So great job, traders. Keep it simple. Appreciate all the feedback and comments. Keep it going and keep it growing 1% better every single day. This has been a massive week, and it's only day 2. Have a great day, and may the markets go with you.